ecosystem is a place where, or a platform or a community where economic activities take place, right? Where people earn money, right? It's very critical to follow that definition, right? To understand this slide critically. So what we've done so far, right? We are a new company, fairly new company. We started March last year, 2021. We launched. And so far, we've disbursed more than $20 million on behalf of financial institutions on our platform, and have served more than 300,000 consumers, right? Our investors today includes Future Africa, Hope Capital, we have Magic Fund, right? We have First Circle Capital, Berrywood Capital, and we've partnered with the likes of Flutterwave, Providence Bank, Hightex, IPPIS, and Mono, Hokra, Remita. And these are some of our partners, some of our customers, right? So majorly microfinance banks, we have commercial banks, asset managers. Now the problems we solve, why these partners trust us is, one, we provide a digital infrastructure, right? We always start from, first of all, acknowledging that what currently exists works in a way. Banks today transact, right? The asset managers transact, business run, right? Without the technology, to improve efficiency, right? You then introduce technology to then drive growth. First of all, we provide a digital platform, right? We partner with the ecosystem so that now they can then embed credit those ecosystem, deploy capital, right, in a very low risk way. And then now for those who need liquidity, right, we also partner with them so that they can then also mobilize deposits through those ecosystems directly from the touch point, the frequent touch points of customers. And embedded finance is really growing in Africa, right? Our firm predicts that the revenue from Africa and Middle East will reach around 8,983 million by 2029. And we want to discuss credit as a driver for business growth, right? For businesses, growth means having more capital to invest, right, in more products and services so that they can grow their revenue. For consumers, it means having a higher spending power in order to live a better life, so they can afford a better life, they can consume more, right? And if you agree with me, these two activities in turn directly increases the GDP of a nation. When money changes hands, right, quite often, right, the economy improves, right? So credit in this case is also a driver for economic growth. So now I said I'm going to talk about the financial ecosystem, how it has evolved, right? I'm a techie, so I'm going to talk about different versions, right? The version 1.0, where we add the traditional financial institutions, right? The process used to be very manual, right? You have to fill paper forms, right? Go through a lot of approval process. Like you can have, some banks will have around maybe 10 to 50 team in their underwriting team. Everything, there's nothing automated about that process, right? It will take about a week, right? And sometimes more to get credit approval, right? And even something as simple as opening a savings account, right? You have to wait, right? I call that era lending 1.0, right? Now we've moved to an era where there are now APIs available connected to multiple data points, right? You have the likes of Mono, you have the likes of Okra now, right? You have Stitch, right? Connecting to different points where you can then access data directly, right? From the bank. You are talking about open banking now coming up, right? Now, for a while, right, you've seen different businesses coming up, building digital banking solutions, right, leveraging these new data points, right, to then increase efficiency in terms of loan disbursement. But like I said, right, in order for you to disburse loan, for you to give loans, right? That's not an issue. The main problem is, how do you know that this person is credit worthy? We've solved part of that problem with access to data, right? In this particular era. So we're in the era 2.0 now, the digital era, right? Now, but there's still a problem with collections, right? Does anybody run a lending business here? Or a bank? Okay, great. Have you experienced the case where via your digital app, a customer links a card, and on repayment date, you realize that card stopped working, right? Consumers can go to their bank to block their card. If you set up a direct debit mandate, they are faster than the direct debit mandate trigger. They will move money from one bank account to a friend's bank account so that you won't take your repayment. So there's still a big issue of repayment collections. How do you ensure that you collect repayments, right? Because at that point, even if that customer has a bank account in your bank, there's still a risk that this customer, if it's a malicious entity, right, if it's not credible, can still move that money, right? I know about an issue with the Momo loans, right, recently in Ghana, where a lot of people are refusing to register their phones, right? And due to that, right, there's going to be a lot of bad loans, right? So now, one problem that we still need to solve in this digital era is the problem of repayment collections, right? But something currently works. If you go back to the way microfinance banks operate, right, where in the marketplace you have the thrift collectors, right, and based on how much you save, right, you are then eligible for a particular loan, for a particular amount, right? Now, there's already a culture of giving a particular amount at a particular time every day, right? This particular consumer understands that particular method, right? So this is an example of an ecosystem where there's already a culture. At that point, the MFB can say, oh, because you contribute this particular amount, right, you will be eligible to take money at any point in time, so far you continue to contribute, right? Because it's a culture. If you ask the market men and women, right, most of them don't even know the interest rates. They just know I can access money whenever I need it. If I need to bake in the morning, I can get extra liquidity, right? Because today is a high traffic day. I can bake a lot. At the end of the day, the thrift collector comes, collects the payment, right? Now, that is an ecosystem. Now, we are moving into another era called Lending 3.0, which is embedded, right? And embedded means we want finance, right, to be in processes that are not traditionally a financial process. Now, imagine a business, a mom and pop shop, now offering you the ability to buy now and pay later, or the ability to maybe spend and then save a little part of that purchase in a particular savings account, right? Now, that's embedded. Now, places where people go to, right, quite often, right? Places where people earn money. So there are two use cases. One, the business use case. There is another one where it's the consumer use case. We are going to focus more on the business use case, right? Which also creates a path for also leveraging on the historical data of the consumer interactions with the business to then determine how much that consumer is eligible for based on their interaction with a particular ecosystem. So it's no longer bring your bank statement, right, and then we see everything that goes in, right? And then oh, this guy is eligible for 50,000 cedis, right? No, it's more of, oh, you ride on Bolt or Uber every day going to work. Okay, so which means every day you have to go to work. In a way, it seems Bolt is the way. So since you do this every day, there's a value attached to that interaction, right? It means if you lose access to that particular ecosystem, right, it's going to hurt you, right? It's just reverse engineering what we do in products, where you use the customer's emotional investments, right, to determine what features to push, right? If you take away that feature, it becomes a pain, right? All right, so with embedded finance, every business can offer financial services, right? And then the key players that enables embedded credits, right? We have the financial institutions, right? Sorry, I like to write. We have the financial institutions, FI, and then we have so I'll put Vind here, and then we have the ecosystem, right? Now, the financial institutions, they are regulated entities, right? Like I said, you can call them the asset manager, the banks, the payments. Let's not talk about payment gateway now. We can talk about the asset managers, insurance companies, right? Family offices, state licensed lenders, right? Now they need an unlimited access to a customer pool. They have these customers already, actually, but there's still a pain collecting, right? Now, one problem we solve, right, we're going to get to that slide, is that collection problem, because now with the ecosystem, if you integrate with an ecosystem where people earn, where there's an economic activity taking place, right, you then have access to how much they earn even before it gets to the bank, right? You have access to then take repayments directly from their source of income. So let's say I ride on, let's say I'm on a logistic platform, right? I do deliveries, right? Every day I earn commission, right? At the end of the week, I get paid. If I need to get a new phone, right, to be more efficient, why can't I just, based on that money I earn, just get a new phone, right? And the repayment comes directly, right, from my weekly commissions, right? So that's one problem. That's the idea behind, that's the way we want to solve the repayment issue. Now, there's an increased profit margin. Now, with the data problem that was solved in the digital era, right, Lending 2.0, what came with it was an increased cost. Now, microloans are very, very expensive, right, to manage today, because on some platform you can pay as high as let's say 4 cedis, right, to access just data. Now, not everybody that applied for a loan will be eligible. That means you can spend as high as 50 cedis, right, before getting one loan, right? Your cost of acquisition goes really, really high, right? Now, with the approach of integrating with ecosystems where people earn money, right, what you get is, simply because the ecosystem has found a new way to generate revenue, right? Because there's going to be either a profit sharing arrangement, right, or a per transaction fee, successful disbursement fee, right, or a collection fee. It means you only pay for work done, right, for each loan you disbursed, right, to that ecosystem, because now it's now a mutually beneficial relationship. It's not a relationship where they're just selling you data and they don't care about the repayment collection. The repayment collection also, right, they also have a role to play to ensure that repayments is taken from that ecosystem, right? So it increases your profit margin, right? And then you have access to valuable data. Now imagine integrating to a logistics ecosystem, right? You know the number of rides, the service hours of this rider. You know about, you know how much they earn every week. You know the particular time they go out, right, to work. That data can determine how much that consumer can repay every week, every month, every year. If you like, you can then model an auto finance facility, right, against that data. You can model a device financing loan, right, against that data, right? Because now you know for this bike, right, this particular consumer will pay over 3 years successfully, right? You can add add-ons, right? Money for fuel, for servicing, insurance, right? And you don't need to go after the rider. You don't need phone data, right? You don't need to call their family or send nasty SMS messages, right, to those particular customers. It becomes easy. There's this peace of mind that comes with it, because you know that particular borrower, consumer, is working for you, right? It's adding value somewhere. Now for the ecosystems, right, now it enables their core business, right, which means the customer within that ecosystem becomes loyal, right? They will rather stay because there's a feeling, if I continue to, if I stay within this ecosystem, right, I'm probably going to increase my spending power. I'm going to be able to afford more, right? I can go from a Bajaj to driving a power bike, for instance, right? I can get a lorry at some point. You understand? I can start doing interstate delivery, right? There is now a growth path, right? Using a logistics ecosystem as a case study, right? Now, there's a new revenue stream. A lot of businesses here have data just sitting around, right, in some database, right? For example, in the payment industry, you have payment gateways, right, just sitting on borrowers, on payers' data, right? Those data, they are assets, right? They are a potential new revenue stream, right, for you. And if you partner with a financial institution, right, you'll be able to monetize that data. Now, contributing to that process of credit appraisal, right, because there's an interesting conversation I had recently where there's this agent banking platform that has been in existence for years, right, probably knows every single person's data around electricity bill payment, right, airtime payments, and like, if you know someone pays the electricity bill, right, at a particular location and moved from that location to a higher tier, to a location with, let's say, with people with a higher income band, you know there is growth, right? You can add that to your credit appraisal. If you see the airtime purchase history and say, oh, this person has gone from, let's say, spending 100 and then has grown to then spending around 5,000. You know that person has probably grown. Like, it's now in a what do you call it? It's probably now in the middle class or has now become an HNI, right? You know when to then introduce new tiers of financial products to this particular customer, right? So with partnership with ecosystems, right, you have data that can enable you to make such decisions, right? Customer acquisition and retention becomes easy, yeah, right? Your customer stays, right? Your returning customers increase because they want more. Now, talking about the challenges solved by embedded credit, right? Now we have access to data. Now you can have access to data easily, right? Get data from multiple sources. right? Now, with our approach, right now, we have the payroll ecosystem, we have the logistics ecosystem, we have the trade finance ecosystem, agent banking ecosystem. Now, imagine finding a customer. Now, this is the financial institutions, right? Imagine onboarding a customer via a payroll ecosystem, and after a few months, you realize, oh, this particular consumer does agent banking, right? That's a new set of data, right? And very soon you say, oh, this particular consumer, right, maybe rides on a logistic platform, right, from time to time. You have more data. You can then increase the eligible amount, right, the kind of savings account you provide, right? You can then introduce products specifically designed to serve the ecosystems that consumer belongs to. So we solved the problem of rigid credit products, right? Now, there are some credit products that just says the interest rate is, let's say, 15% per annum, right? The minimum amount is, let's say, 100,000. Maximum is 2 million. Is 2 million, right? That might not work for everybody, right? Credit can be as simple as I need instant settlement on a particular payment gateway, right? On some payment gateway, your settlement comes T+1 the next day. Some T+3, some T+5. Now imagine that Instagram seller who needs that cash to go to the market, maybe buy the product, and then deliver the next day. So it can be as simple as I need instant settlement now. It can be as simple as, for example, in the agent banking ecosystem, I need capital to do transactions from between Saturday and Sunday because the banks don't open Saturday and Sunday. So I can't fund my wallet, right? It can be that. So embedded credit solves that problem of rigid credit product because now you are forced to think about product that works for particular use cases in the different ecosystems you are targeting, right? You're forced to build credit policies that works just for that use case, right? Expensive loan process, right? We discussed that, right? The cost of data alone, right, can take more than 50% of the interest income on some products, right? And then default rates. Now, because you now have access to the source of income of the borrower, you are able to take repayment directly, right, from where they earn. Now, ecosystem has a credit growth, right? So there's always a need of credit, right? Even in a business scenario, especially now, quite frequently in startup, right? Because just of the decline in what call it, in investments, most startup will be looking at even raising debt, right? That's another ecosystem, right? Now, with new, what I call it, new products, right? Consumers can then access, right, a better lifestyle, right? Now, agents, right, can enable financial inclusion, right? Just because they have access, right, to float, right? Now, for the agents, for the payment gateway ecosystem, right? What if a merchant, right? I mean, what's stopping a merchant who does, let's say, 100 million every month on a particular payment gateway from getting, let's say, 60% of their monthly revenue upfront at the beginning of the month, right? I mean, this particular merchant has been collecting payments, right? You know the behavior of the customers of that particular merchant. You know maybe between the 1st and the 10th of the month. This is the peak period for that merchant. And then the next peak period is until, let's say, from 22nd to 30th of the month. You have that data as a financial institution, but you only have it when you've connected to the data point for that particular payment gateway. So that's a use case for payment gateways, right? Offering products like debt capital, right, to merchants, right? There's also another use case for payment gateways, right? That's a buy now, pay later product, right? A consumer who always use a particular payment gateway to make payments. You have data. So brief history about me, I used to be in payments, right? You have some customers who profess using a particular payment gateway for booking their flights, right? You have some who interacted with multiple merchants on your platform, right? That's data. You can use that data to offer buy now, pay later services to that particular customer. You can use that data to even relax, right, some rule, right? That's something else. Talking about failed transactions, which is another issue, right? Now we have the payroll ecosystem. Every business today pays salary in a way, manages their payroll in one way or the other, right? Now there are platforms today, right, who helps businesses in making the salary payments, the final remittance of salary to consumers, which means now financial institutions now have access to know how much consumers earn every month. You know when they get a bonus, right? You know when they get a pay cut, right? And you can predict how much they are going to be eligible for. Now, if you have that data, I don't think that customer has to have a bank account with you before you can offer credit to that particular customer. That's totally unnecessary anymore, because that particular ecosystem, it's currently serves a purpose of a bank. If you issue a credit card against that data, saying, oh, now you have access to $1 million, right? And you just have to pay the interest, right, every month. You are sure that there is money coming through, and with an integration with a payroll management system, you are able to take the repayment even before it gets to the bank, right? That's the payroll use case. We have the logistics use case, right? I've said a lot about this. You can know the service hours, the ride hours, right? The time these particular drivers go out, right? You know how much they earn every week. You can deploy a financial product against that. And then you have the invoice discounting. This is a business use case, right? And you have the education sector, right? So the education sector, business is a seasonal business, right? Where every time the school earns money, right? Now most schools struggle to grow their business simply because the capital, they have to wait a long time to accumulate a capital, right, to maybe build an hostel, right, increase their fleet of school bus, right? If a school does a transaction of around $1 billion, right, why can't you give that school a 500 million, right, just to execute and be sure that the payment is coming from a collection platform that you have connected to, right? Now we have agent banking, right? So in Nigeria we have agent banking agents, right? And one problem with this ecosystem is during the weekends and holidays, right, they run out of cash and they can't go to the bank to fund. What if you provide that float, right? What if you provide the instant settlement needed, right, to ensure that that ecosystem continues to move? We still have the asset management, the oil and gas, the real estate, healthcare ecosystems, right? So at VeendHQ, right, what we've done is we've provided a platform, right, that integrates with all these ecosystems, right, connects to the required data points. And what we also do to even assist the financial institutions is with every ecosystem, we also come up with a credit policy that we think will work. So we also help you in determining the products, right, the eligibility criteria, right, and work with you to understand the needs of the businesses and consumers within that ecosystem, right? And then we create a platform that helps you originate in an automated fashion, because not every ecosystem requires a web application, right? The channel can be POS, it can be a credit card, it can be a USSD channel, it can be a mobile app, right? Each ecosystem has a channel that works best for them, right? It can even be a particular business location, right? Now, we also work with the financial institutions on now deploying that liquidity, right, to that ecosystems, right, and also ensure that the channels for receiving deposits and also disbursing loans, right, functions properly. Now, as a business, with all this, right, the financial institutions providing liquidity, right, VeendHQ providing technology, and then the ecosystems providing the data and the channel for repayments, right? What this means is businesses can then ride on this particular integration to then start offering credit. Now, back to the school ecosystem, right? A school who, let's say, gets $1 billion every month simply by collecting school fees, and at the beginning of the term gets a 500M, right, can now choose to say, oh, a parent A, right, pay school fees early, right, I'm going to assign a credit limit backed by a particular bank to this particular parent, right? Which means that particular parent, simply because that parent belongs to one of the existing ecosystems, right, it is sure that the repayments will come back. Now, it's no longer a guess game, right? I heard multiple buzzwords, right? Machine learning, right? Technology is great, machine learning is great, but it still needs to learn, right? So we still need to start from what works, and then use that to continue to learn and build that behavior that then would then form a, what I call it, a scalable model, right, that can be integrated, right? Now, different businesses can then leverage this particular ecosystem to then deploy credits, and that's where it's going to drive growth, right, for businesses. So I'm going to take questions. So I'm going to take questions now. Okay, hi.
Hi. Thank you for the presentation.
All right.
2 questions. When you work with financial institutions, what's the business model and who bears the risk?
Okay, the financial institutions bear the risk. The business model is usually transactional, right? So one other thing that prevents, what I call it, the growth of credit is also the cost of technology, right? Most of the time, the approach has always been, oh, I have this fancy technology, it can fly, it can bend, right? Now you need to pay me $1 million to get this, right? So the business model with financial institutions is transactional. So that's where it encourages everybody within that ecosystem to participate, to ensure that it's successful. Now the ecosystem ends per transaction, right? The technology provider, in this case VeendHQ, also ends per transaction. So everybody is forced to contribute.
So is it like a revenue share or like an API call fee?
No, it's more of a revenue share. Yeah. Okay.
Yeah. Thank you for the presentation. My question is around recovery. So this is, for instance, you talked about somebody, a Uber driver, right? So he's been driving on the platform for a while, and then you know his history, you know what he can, and then you want to use that as a basis, right, to give him a right. What if he stops driving on the platform? How then do you recover that? I feel like it makes a lot of sense to use his, what do you call it now? His earnings, right? You don't, the payment is meant to come from his earnings, right? So what then happens when he stops earning on that platform?
Yeah. So when it stops earning from that platform, it means it stops earning, right?
Yeah.
So an example would be, I'm employed by a particular company, right? The bank has given me a credit limit. What if I get fired? I stop earning. So it's a risk that currently exists in lending. So lending is not going to be without risk. There's still going to be that risk of drop-off. But then, right, for that particular scenario, right, where the driver drops off, this particular method, it's a journey, right? Now, I spoke about integrating with multiple ecosystems. If a driver drops off from a particular ecosystem, there's a high chance that driver moves to another ecosystem, right? Now, one thing we do as at VeendHQ is to ensure that we integrate with ecosystems, right, with a lot of ecosystems as fast as possible, right? So that way, if someone moves from one ecosystem to another, right, we know about it, and then we know that a borrower now exists here, and then this is a new collection channel, right? So it's still going to work with the current traditional model, right, as a backup. So today, with the digital lending bit, right, you have the debit card, right, you have the direct debit mandate as a backup. Right now in Nigeria, you have the GSI as the last resort, right? So if any of that fail, you can then move. So this is, again, it's innovation. It's supposed to solve a pain point, right? It's not supposed to remove what currently exists or replace it.
So that means the risk is high.
It's a very high risk. That's what it means. Because if I took a loan and I lose my job, and probably I get job somewhere else, you know where they do in Nigeria. They can even change their name. That's what they do. It has happened to me in the past, whereby one of my staff, you know, was blacklisted. Because he took a loan from Raymond, you know, so he was blacklisted. So, and what happened was that staff, you know, left Lagos and went to Kogi State and got a job with his brother's name. And that's it.
So what KYC was used for that particular consumer?
I think they used, there was a KYC, I think it was the bank, it was Raymond then that did KYC.
Yeah, I doubt if BVN was involved. So I doubt if they used the BVN, right? Because already there's a means for identifying customers.
Sorry, even they used BVN, his brother, he used his brother to get a job elsewhere in Kogi State. You understand? So you're not verifying his own BVN. I mean, sorry, you're verifying his own BVN. You're not verifying that of his own brother. So payments, the salary is going to his brother's account, and lo and behold, real money is chasing him with his own BVN.
Okay, so this is another use case for one of the issues, right, with the existing model of accessing financial data, right? So like you said, he used his brother's account to access credit, which means the eligibility was based on the brother's account. So both his income and the brother's account was used to determine eligibility, right? Now that process is already flawed. This particular consumer dropped off from a particular, let me call it, payroll ecosystem. It means he stopped earning from there. His BVN was blacklisted, which means if his BVN was used to get the second loan, it won't be eligible, right? Now, another entity is now involved, which is the brother. Now, if you can determine where the brother ends and use that for eligibility, right, you won't have that issue of using that, both the brother's data and then the malicious customer's data for eligibility. So I think that's still an issue with the credit process, right, that was used for that particular transaction.
So I have a question. This doesn't exactly take away all of the risk.
No.
And I'd like to ask, what is the impact of insuring these loans in terms of the payment plan, profit margins, and all of that?
All right. Okay, so what we do at VeendHQ is this, right? So like I said, for each credit, for each ecosystem, we come up with a credit policy. Now, some credit policy requires insurance, right? And some even have multiple levels of insurance. So some products can have as little as a credit life insurance cover, right? Some can have good in transit, right? For example, the logistics ecosystem, right? Some can have, what do you call it? An insurance that covers freights, right? So it really depends. So that's why each ecosystem has their own credit policy. You understand? The credit policy determines the risk, right? Because all ecosystems has their own risk, right? For the payroll ecosystem, the consumer can leave the employer. Even the employer can leave a particular payroll ecosystem, right? So there needs to be, what do you call it, a way to protect the financial institution, right, against those risks, right? So each of the credit policy, right, will have different covers.
My question is there an ecosystem for individuals who don't have their uncollateralized loans, microloans, the type you see with microloans? Is there an ecosystem for that?
Who don't earn
Or if you don't have
a formal means of earning?
like a student now, for example, you provide payment services to lenders. There are people who collect loans, 5,000 naira, 2,000 naira loans, without having collateral like that. Is there an ecosystem of
Okay, so we are working on something, right, that uses the credit eligibility of the parents, right, to then determine eligibility for the what do you call it, for the children, right? So where the parents can share their credit limits with family members, right? So this is going to be deployed via a card product where you can have different limits for different members of the family, right? So that works for that particular use case.
Is there an ecosystem also to address, for example, I take a loan from your organization and maybe the next 3 or 4 months I jackpot, the jackpot thing in Nigeria. Then I go to Canada and that's it. So is there any ecosystem to track the guy over there? Insurance. Because that's another issue we are facing.
Yeah. Okay, so that's one problem that we're solving. I just had a discussion with someone in this summit about how Africans in diasporas are underserved financially, right? How they find it hard to get deposit accounts with good interest rates, how they even find it hard to have access to credit, right? Both home and abroad, because now the account here becomes dormant, right? So the way we are solving that is by still continuing to serve that customer, even though it's abroad. There's something interesting going on right now for people living in Africa, right, where they have to provide proof of funds, right? I know a couple of businesses that do something right. But then, if you go to if you go to Canada, for example, you still need an account, right? How can you, as a financial institution, offer an account that will then continue to serve that particular borrower? What usually happens today is when a consumer leaves Nigeria, everything in Nigeria stays in Nigeria. What if you still know how much that particular consumer earns, right, over there? What if that payment still comes to you via a subsidiary over there and you continue to serve that particular customer, right? So that's a problem that still needs to be solved, right? Yeah. All right, so I'll take 2 more questions. Okay, so in the absence of none, right? So at VeendHQ, we are always open to integrating with new ecosystems, right? Now, it's very interesting to see the kind of financial product that can be deployed, right, into different use cases, right? So different modes of earning, you understand? And then we are also open to working with financial institutions. So if you want to reach out to us, right, you can reach out to us at support@veendhq.com. You can visit our website, right? And then if you like to meet after this session, right, we have a booth in the area there. You can stop booth 16, right? We have a booth there at booth 16. You can come by. And then we have some swags, right? So help yourself with one. Thank you very much.
Wow.